$38 trillion. That's America's national debt right now, today. Not next year, not some projection, not a hypothetical number. This is the actual debt sitting on the books as of December 2025. And if you think a number like that doesn't touch your life personally, I need you to listen very carefully to what I'm about to say. Because while you were scrolling through social media, while you were watching Netflix, something historic was happening behind the scenes. The largest financial institutions in the world began doing something they haven't done in 75 years. They started moving money, huge amounts of money, out of dollar-denominated assets. Quietly, methodically, without headlines. This isn't a conspiracy theory. This is documented capital flow. Public filings, treasury data, numbers you can verify yourself. And by the end of this video, you'll understand exactly what's happening, why it's happening, and, most importantly, what comes next. Because there's a pattern here. A mathematical pattern that has played out 3 times over the last 500 years. The same stages, the same warning signs, the same devastating outcome, and we're watching it unfold again right now, in real time. The only real question is whether you'll see it coming, or whether, like millions before you, you'll one day be asking yourself how you missed all the signs. Stick with me, because the next 15 minutes are going to change how you think about money forever. Global debt has just hit $251 trillion, according to the IMF's latest data. That's 235% of global GDP, the highest ratio in recorded peacetime history. U.S. debt alone jumped from $36.1 trillion in January 2025 to $38.4 trillion by December. That's a $2.3 trillion increase in just 11 months. But here's what nobody's telling you. This exact scenario has happened before. 3 times in modern history. And every single time, the country holding the world's reserve currency collapsed within 36 months of the smart money leaving. Not similar collapses, identical patterns, the same stages, the same timeline, the same result. This pattern is mathematical, it's predictable, and once it reaches a certain point, it's unfortunately unstoppable. Let me show you how it works. Every major economic collapse over the last 5 centuries has followed a precise 4-stage cycle. Stage 1 is the ascension phase. A nation becomes the center of global finance. Capital floods in from everywhere. Its currency becomes the standard for international trade. Everyone wants in. Banks expand, markets boom, innovation accelerates. The future feels limitless. Confidence is absolute. This stage typically lasts between 50 and 80 years. Stage 2 is the overextension phase. Success breeds arrogance. Governments begin spending beyond their means. Military expansion, foreign interventions, massive domestic programs, all of it funded with borrowed money. Debt starts growing faster than the economy itself, but nobody panics because asset prices keep climbing. Real estate explodes. Stock markets hit record highs. Everyone feels wealthy. Central banks print money to keep the momentum alive. This stage usually lasts 20 to 40 years. Stage 3 is the silent exodus, and this is the critical phase. This is where the smart money sees what's coming. Not the public, not politicians, only the people who actually read balance sheets. Major institutions quietly begin rotating capital out. No announcements, no press releases, just systematic, calculated movement into safer jurisdictions. Foreign investors reduce their holdings. Wealthy families diversify internationally. The exodus starts slowly, almost invisibly, and then it accelerates. This stage lasts anywhere from 18 to 36 months. Stage 4 is the collapse. The currency loses its reserve status. Foreign central banks dump their holdings. Inflation explodes. Interest rates spike. Asset prices crash all at once. Banks fail. Pensions evaporate. The middle class is wiped out. Political chaos follows. And everyone asks the same question: how did we not see this coming? The answer is simple. The pattern was always there. Now let me prove this pattern is real with 3 historical examples, 3 global superpowers, 3 reserve currencies, the exact same cycle and the exact same outcome. The first example takes us to the 1500s, Spain, the most powerful empire on earth. No debate, no competition. Spanish galleons returned from the Americas, loaded with more gold and silver than humanity had ever seen. The Spanish real became the global reserve currency. If you wanted to trade internationally, you needed reals. Madrid was the financial center of the known world. Stage 1 was complete. King Philip II controlled half of Europe. Spanish armies were considered unstoppable. The Armada ruled the seas. Wealth poured in from colonies spread across 3 continents. And what did Spain do with all that money? They spent it on everything. Wars with France, wars with England, wars with the Ottoman Empire, wars with the Dutch, a massive military presence across 3 continents, a bloated bureaucracy that consumed fortunes, royal palaces that cost entire kingdoms, and the Spanish Inquisition, burning money right alongside heretics. By 1550, Spanish government spending was running at 300% of revenue, 3 times what they collected in taxes. The gap was covered by borrowing, loans from Italian banks, loans from German merchants, loans from anyone willing to lend. But gold kept flowing in from the New World, so nobody worried. Asset prices in Spain continued to rise. Everyone felt rich. The empire looked invincible. Stage 2, fully verified. Then quietly, something changed. In 1555, major Spanish banking families began moving assets to Genoa. The Fugger family, Spain's largest creditors, started demanding repayment in gold instead of promises. They wanted out. By 1556, wealthy merchants were transferring operations to Amsterdam. Not overnight, not dramatically, slowly, opening offices, moving inventory, redirecting trade routes. Why? Because they could read financial statements, and those statements showed that Spain was functionally bankrupt. The Spanish government was paying 40% interest on some loans. 40%. That's not strength. That's desperation bleeding through official documents. Stage 3, clearly documented. In 1557, Spain defaulted on its debts for the first time. Credit markets froze. Spanish bonds became worthless overnight. The government seized private gold shipments just to pay soldiers. Financial chaos spread rapidly, but the king insisted it was temporary. A one-time issue, everything would be fine. Then Spain defaulted again in 1560, again in 1575, again in 1596, and again in 1597. 4 defaults in just 40 years. The currency collapsed, inflation wiped out the middle class, Spanish power evaporated like morning fog. By 1600, Spain was only a shadow of what it once was. The golden age was over, and it never returned. Stage 4, complete. So where did the money go? North, to the Dutch Republic. Amsterdam became the new center of global finance, which brings us to the second example, the 1600s. Amsterdam was, by every measure, the richest city in the world. The Dutch East India Company was worth the equivalent of $8.28 trillion in today's money, more than Apple, Microsoft, Amazon, and Google combined, times 2. Dutch banks financed global trade. The Amsterdam Stock Exchange became the first of its kind in history, and the Dutch guilder was the world's reserve currency. If you wanted to do international business, you needed guilders. Period. Capital flowed into Amsterdam from everywhere: Asia, Africa, the Americas, Europe. Money searching for returns naturally found its way into Dutch banks. The Dutch Republic in the 1600s was like Silicon Valley, Wall Street, and London combined into a single square mile. Now, I know some of you are probably thinking, where's he getting these numbers? That's a fair question. Every single figure comes from official sources: the Treasury Department, the IMF, congressional reports. All verified, all publicly available, all linked in the description. Don't take my word for it. Check them yourself. Stage 1 was undeniable. Then came the wars. It's always the wars. 3 Anglo-Dutch wars between 1652 and 1674. Wars with France, wars with Spain. The Dutch military presence stretched from Indonesia to Brazil to South Africa, and all of it cost money, enormous amounts of money. Government debt exploded from 4 million guilders in 1650 to 80 million by 1690, a 20-fold increase in just 40 years. To pay for it, they printed money. Sound familiar yet? At the same time, tulip mania took hold. Tulip bulbs selling for more than houses. A single rare bulb could cost 10 times an artisan's annual income. Asset prices became completely detached from any economic reality. Everyone looked rich on paper. The Bank of Amsterdam, supposedly the safest institution in Europe, was secretly lending out depositor funds to finance government wars. They were running fractional reserve banking before it even had a name, a Ponzi scheme dressed up as legitimacy. Stage 2. Check. By 1690, the smart money began moving. Major banking families quietly transferred operations to London. The Sephardic Jewish merchants who had helped make Amsterdam wealthy started relocating. Portuguese traders opened offices in England. German financiers pulled capital out slowly, systematically, over years. Why? Because insiders knew something the public didn't. The Bank of Amsterdam was broke and had been since 1672. For decades, they had been using new deposits to pay old withdrawals. Classic Ponzi mechanics. The secret held until it couldn't anymore. Stage 3, fully verified. Then came 1795. French revolutionary armies invaded. The Dutch Republic collapsed. The guilder imploded. The Bank of Amsterdam's fraud was exposed. Depositors lost everything. Riots filled the streets. Political chaos followed. The Dutch Golden Age ended just like that. 150 years of dominance gone in a matter of months. Stage 4, complete. So where did the capital go? London. Britain was next. The cycle continued, which brings us to the third example. And this one matters most, because it's the most recent, and the closest to our current situation. The 1700s through the early 1900s. The British Empire. The sun never set on the British flag. You've heard the line. Everyone has. At its peak, Britain controlled 23% of the world's population and nearly a quarter of the Earth's landmass. The pound sterling served as the global reserve currency for more than 200 years, longer than any currency in modern history. The City of London was the center of global finance. If you needed capital for anything, anywhere, you went to London. British banks financed railroads in America, mines in Africa, plantations in Asia, and infrastructure across every continent. More than 60% of international trade was settled in pounds. The gold standard itself was built around sterling. British power looked infinite, permanent. Stage 1, absolute. Then came the 20th century, and 2 world wars. World War I alone cost Britain £44 billion, more than $600 billion in today's money. They borrowed from America, from their own citizens, from anyone willing to lend. Government debt jumped from 30% of GDP to 130%. Remember that number? 130%. That's exactly where America is today. Britain tried to stay on the gold standard. It failed in 1931. They tried again after a brief return. Failed again in 1933. The system was breaking. World War II made everything worse. More debt, more printing, more promises they couldn't keep. Britain technically won the war, but financially it was ruined. Broke, dependent on American loans just to survive. Stage 2. Check. By 1949, the quiet exodus had begun. Major British corporations started shifting operations to America. Unilever, Shell, British Petroleum. They weren't shutting down in Britain, just redirecting investment, moving capital, building elsewhere. Wealthy British families transferred assets overseas. Switzerland, America, Canada, anywhere that wasn't overtaxed, overregulated, and declining. The brain drain accelerated. Scientists, engineers, entrepreneurs, academics, all leaving for opportunity in the United States. Britain offered high taxes and shrinking prospects. America offered growth. The choice was obvious. By 1960, foreign investment in Britain had fallen 62% from pre-war levels. The money was leaving. The talent was leaving. The future was leaving. Stage 3. Check. Then came 1967. The pound was devalued by 14.3% overnight. One day you woke up and your currency was suddenly worth 14% less. The government had no choice. They had burned through their foreign currency reserves trying to defend the exchange rate. The game was over. In 1976, Britain went to the International Monetary Fund for a bailout. A bailout. The former global superpower, the empire on which the sun never set, was forced to beg for emergency loans like a developing nation. The humiliation was complete. The pound lost its reserve currency status. Global trade shifted to the dollar. Britain's century of financial dominance ended forever. Stage 4, confirmed. 3 empires, 3 reserve currencies, 500 years of history. The same 4-stage pattern, the same outcome. Spain, the Dutch Republic, Britain. Each followed the exact same path, from dominance to collapse. Now let me show you why America is in stage 3 right now. In 1944, Bretton Woods, America becomes the anchor of the global financial system. The dollar is backed by gold at $35 an ounce. Other currencies are backed by the dollar. The system is born. America wins World War II. Europe and Asia lie in ruins.
Capital floods into the United States. American markets become the deepest and most liquid on Earth. Everyone wants U.S. assets, stocks, bonds, real estate, treasury securities. The golden age begins. From 1945 to 1971, 26 years of unquestioned dominance. Stage 1, complete. Then came August 15th, 1971. Richard Nixon ends gold convertibility. The dollar becomes a pure fiat currency. No gold backing, no commodity backing. Just faith in the U.S. government. Just trust. And once you remove limits, spending explodes. In 1980, U.S. national debt stood at $900 billion. A big number, until you see what comes next. 1990, $3 trillion.